Market sentiment has changed again. Investors have already factored in the results of the election, so now they are switching the attention to the news on progress in the development of a vaccine. Pfizer announced that the coronavirus vaccine was more than 90% effective in preventing COVID-19, among these without evidence of prior infection. This news fueled optimism across the market. If the vaccine helps to eradicate the virus, the Fed will start pumping up liquidity in the economy. At the same time, the US dollar gained momentum amid the likelihood of a divided Congress and a more modest economic stimulus package. So the US dollar index, which measures the strength of the greenback against a basket of 6 main currencies, pushed off from a 2.5-year low and rose to the level of 92.80. However, it failed to develop a corrective movement. The long-term outlook remains hazy due to the rise in public debt and low interest rates. The stock markets are also beyond, yet Wall Street investors are worried about political uncertainty, as Trump has already refused to commit a peaceful transfer of power. Besides, traders are concerned that the size of a new coronavirus relief package in a divided Congress may be much smaller than in Congress controlled by Democrats. Nevertheless, market participants are now more focused on the news about the vaccine. The US dollar surged from its 2-week lows amid hopes for the COVID-19 vaccine. The dollar-yen pair soared by 240 points. Of course, such an unexpected and sharp rise is unlikely to last for long. So, forex experts suggest a reversal and resumption of the decline. In such a scenario, the pair will consolidate under the trend line below 104.78. It will open the path to the bearish target at 104.05. However, the pair may also move up if it breaks above the level of today's opening at 105.60. If so, it may well grow to the level of 106.06. From a fundamental point of view, risk aversion is likely to return to the market soon. China unveiled its inflation report, which showed a slowdown in consumer prices to 0.5% in annual terms. This is the slowest rate of consumer price growth since October 2009. Such a weak report indicates a prolonged period of crisis in the global economy. The AUD-USD pair, which is often viewed as a barometer of a risk sentiment in the Asia-Pacific session, is trading sideways. An upward movement looks unlikely. To resume the downward trend, the pair needs to go below the level of 0.7220. That's all for now. We keep monitoring the financial market situation. Subscribe to our channel and see you in several hours. We will take a close look at the US trading session.